Hey, listen! The markets are opening. My name is Andrew, that is Professor Meatball, and you are you. And that's all we need you to be. We got some fat stacks here that we're ready to spend on some brand new knowledge. Oh, that's right. It's a discount right now. It's $0 to start learning and growing with us. Let's get going. It's about 5 minutes until the markets open. I got my bell ready here. I'm about to just bring it on down because Monday morning markets are opening. We have data, we have Rensel's a DD opening, we have brand new research, and of course, as always, we want to be able to understand exactly where the options chain is. We have everything that you need to know and more. I was talking this weekend with some brand new software, and that new software we could be implementing sometime today or sometime tomorrow, one of those two, to give you guys better indicators for when that swing is going to happen. We have new swing indicators, we have new squeeze indicators, we have brand new good morning indicators. Let me say good morning to you guys. We got Rosa Deza, we got Thaddeus Ghosto, William Fleming, Sea Dog, Andrew Coliber, we got Joe H, we got Ted Paniza. How's it going, guys? Good morning, all of you. Okay, so one thing first, I'm gonna show my head one more time, and I'm going to conglomerate these windows, and then I'm going to bring this back, and once more, we only have about 4 minutes left until the markets open. We got scissors already in the chat. Ladies and gentlemen, thank you for joining us. We got a long day today. Bell to bell, right? Gong to gong, and we need scissors in the chat because once again, as the morning opens, you're likely gonna see some important paper handing in the morning, right? This is just to be expected. One of the first things that you'll notice in pre-market is this head and shoulders pattern here, where we are retesting the same level of support 3 times at 180, right? Not being able to push past 183. This is not likely a bullish pattern for us in the pre-market. However, this is something that will be able to get us pushed past, and whatever happens in the pre-market, because that is when the most volatility, probably the most volume we'll see today, is going to likely be. Riker Mitchell already coming out of the gate, joining the Mo Monkey Moon Platoon as a special operations agent. I appreciate you going down and pressing that join button. That's what Riker did. If you guys want to as well, that supports the show. And if you guys haven't yet press that little subscribe button and bell button, we're trying to get all the way up to 74,000 today. Just 150 left, and 150 is currently going to bring us up to 74,000. So we have a lot to listen up on this morning. First off is that options chain, right? We got major battlegrounds here, 5 million to 5 million puts to calls. That is $10 million riding on a $200 strike price, right? So we're likely going to see a lot of turbulence on the way up there. Not much of a ramp on that favors either direction as we loom from 185 all the way up to 200, but it's all calls all the way up until 300, baby, where we're seeing a significant put wall. That said, we are looking positive for the options chain for today, just going to be slightly tricky at $200. We're likely going to see some major turbulence, likely going to see a bounce on later today. We also have the synopsis that we need to know before markets open, but we only have 2 minutes until markets open. So I'm going to actually answer some of your questions. If you guys have questions from over the weekend of exactly what you should know, and then we will go through Rensel's DD today. KM, enjoyed your videos over the weekend and looking forward to your upcoming videos this week. Now, I appreciate that. Ken Fabio, yo, how's it going? Trick, David Christopherson. We have Casper Guide. That's a cool name. Let's see, Johan Orellana. We have, call out the best stock pick for the day, week, mine, CCNC. Now that's kind of cool. You guys can go ahead and drop some, even if it's GME and AMC, whatever you think is the best pick of the week. Let's see now. Yeah, Bloomberg says ship is unstuck. They got to take advantage of the high tide and brought that ship out of the Suez Canal, likely going to affect the market pretty specifically, I think. Let's see. So, margin call update, not close yet. It all depends on the price of the stock here, right? Let me open up Discord to see if I'm missing something, just in case. Can open up. For Luna is here as well. Oh, the markets are opening. Markets have opened Monday morning, March 29th. How is it going? Are we pumped? Are we psyched? Let us see as GameStop is bounding up and down. $2 ranges here. Big green candle right out of the gate. But if this is going to bring us above 182, which 0.88 is the high currently, this is likely going to have some bouncing later on. AMC, on the other hand, opened at a high of 1127 and now is hovering. This is probably a glitch, though. I don't see. Yeah, that's a glitch. I don't see AMC anywhere near $11 right now. GameStop, on the other hand, big green candle out of the gate. Feels good. Feels good. Let's see if this momentum lasts, but don't get shaken out of your position just because some paper hand shenanigans is likely going to follow. All right, so, whoo, baby. Okay. Jake says, happy to watch the sun rise along our candles this morning. Jack to the T's, heck yeah. Callum Langford, thanks for doing these streams. Must be super early in the morning for me. It is about 6 a.m. Every daily grind, but you know that's the kind of work we got to put in. As expected, there's that big red candle. Paper hands coming in, scissors in the chat for them. Not even that scary, honestly. Just a 1.5% down. Likely we're going to see that bounce upward for the rest of the day. Okay, so. As this goes on, we have some updates in the morning. I do want to be able to check my Discord real quick. Okay, so. Okay, so synopsis for 3/29/2021. We salute you, Pixel. As most of you know, some DD makers had a lot of hate going their way. You guys likely have seen that earlier last week. Right, so we are trying to move around that, right? Apes do not fight apes. So regardless if his predictions were right or wrong, we should not have gotten this amount of hate and threats. So he will not be posting here anytime soon. You will be missed, Josh and Pixel, right? This week we have April Fools coming up, right? Any April Fool's jokes is permaban. I'm not going to be making any April Fool's jokes on this channel. There's too much at stake here. So ladies and gentlemen, there's no April Fool's jokes coming up on this channel. You heard it here. We're just going to be providing you the straight up facts here. All right. Let's see. Domo AMA. After a successful AMA with Dennis Kelleher, we now have an AMA with Domo on 420 at 420. They picked the data and it loves it. We have a cartoon here. It's a bubble. It's a bubble. It's now a hot air balloon. It's a bubble with a brand new like terraformed space station here. Paburo, how's it going? Good morning, Andrew. Respect for the early bird hustle. We're getting a bit nervous that you wouldn't have me today. We haven't missed a single day for a couple of, wow, a month and a half, 2 months. We haven't missed a single day for 2 months. Boom. And now we're even starting to have weekends as well. Double boom. Okay, wait, hold on. So I'm going to show my face real quick. There we go. All right, much better. Hey, call me maybe. So last Friday we saw some huge block trades take place. Jake Howden, thank you so much. Hey Andrew, can you explain why the charts mirror each other? Other than the manipulation, is there another reason? There are multiple reasons, right? One, they are being attacked at the same time, so you have the right idea, is that the same people that have shorted GME likely have a stake in attacking AMC as well. However, they are also in the same ETFs that are getting shorted at the same time, right? And these ETFs trend up and down. Even if there's no manipulation, they're likely going to keep the AMC and GME in the same track, roughly. And finally, the participants in this larger institutions and retail investors that invest in these stocks likely are of the same mentality. So that's why. However, if there does come out with a big bombshell exactly why they are connected, other than these ETFs, other than these psychological reasons, other than these manipulation reasons, we will be the first to know. Good morning, Crab TV here. Yes, we are starting to see that wedge coming down in here. So this is likely going to bring us into the day with high expectations of where this could be going here. The magnet could be turned off so I can draw a little clearer. There we go. Boom. Can I turn off auto? Love to draw about these magnets. Oh wait, I think I can make it bigger and then draw it bigger. Now I'm gonna do that. ZN says GME beta is at -30% on Bloomberg Terminal. Please explain how nuts that is. Once again, we've talked about beta before, right? Beta is the idea that your stock or whatever asset that you are trading is going to be how intensely the asset follows the back and forth of the markets. However, beta is usually just a number, not a percentage. So it's either 1 or -1, which would mean it follows perfectly or inversely perfectly with the market. However, -27% is either -0.27, which I'm imagining, or -27, which is far less believable. So ZN, let us verify which one it is, because either way, there are still major outliers that contribute to that number. Echo Lotus, like the video, Moon Platoon. Seriously, 400 likes and almost 3,000 of you in this chat. That math doesn't add up, and you know I love math. Drop a like on this video so that more Moon Platoon members find it, and it benefits us all to be able to share the message. All right. Yeah, have I missed a key puzzle? I got you. We're about to cover this DD in just a second after we cover the synopsis for today. All right, so Goldman Sachs Group Inc. liquidated $10.5 billion worth of stocks in block trades on Friday, part of an extraordinary spree of selling that erased $35 billion from the values of bellwether stocks ranging from Chinese technology giants to U.S. media conglomerates. Okay, so Archegos is a hedge fund that could be where the speculation, it could be where they over-leveraged and got margin called. James Bird, yo, love the work that you're doing. Can you check ammo for a long play? You got it. Ammo is going to go to our guest spot right here. All right. Because we don't have access to their books, this remains speculation. We also don't know for sure if this had anything to do with GME. This may be a result of the Suez Canal being blocked. We just don't know right now. If you guys did not hear yet, the Suez Canal is now being unblocked because of high tide and a bunch of people working on unstopping that ship, blocking the way. FX Hedge, Goldman Sachs, Morgan Stanley declined comment when asked if there's anyone planned large block sales. BBG, be ready. This statement, however, does give me food for thought, as this could mean stuff like this can happen, but it could just be their MO that they decline comments on things like this. Some more details on who Archegos is when I look at this post, and it goes into more some detail about who they are and what may come up. I'm going to do a bit of digging about what's going on with Archegos here so you guys know what's going on. Kenny G, When you dump 3 million GME shorts at 10 a.m., all of the retail buys them up and calls it a sale. That's what happens every morning. And GameStop coming off of that wedge beautifully. Bullish AF. This is a fantastic signal. Let's see. It was already rejected at 187 like clockwork. Set up that support and resistance level weeks ago, and it still acts as a perfect indicator of when we are expecting to see some trouble. Oh, ZN, apologies, raw beta -36, adjusted beta -23. So that means that each tick the market goes up on composite is going to affect GME negatively by 23. Here's how you can think about it. The way that GME has gone up is roughly, when it was around 200 bucks, around 1,000% up on the year. So that is, really good for your attendees if you bought in around 45. However, the people that the market in itself has either gone down or skewed a little bit downward overall, right? I think the last time we checked, it was about 7% up, definitely not 1,000%. However, if -27 is an indicator, that means that we have had a tiny minor fall in the market overall, or whatever the beta is actually composite of. And GME, on the other hand, has inversely jumped ridiculous heights. That's what it's likely saying, but depends on the time frame for when that beta was calculated. Echo Lotus wants to check out Etsy, sure, right after ammo. Okay, so Citadel hiring freeze. Citadel has the highest, Citadel has the highest turnover rate of all the major hedge funds. This is not a big thing in and of itself because these companies are brutal. You either make the cut or you don't, no second chances, etc. But they're terminating almost a full year before their competitors, which is high. Plus, taking into account that Citadel hires are normally of a cyclical nature. This year, it seems to be different. For the first time in years, they currently aren't hiring. If they were still a healthy company, they would be hiring, like GameStop, right? They would be looking at the future and thinking to themselves, we need people for the next season. Kenny gave an interview from Financial Times here. This also shows a narrative that he wants to create in which retail and stimmy inflation is to blame for the inevitable crash caused by them. By them, we're talking about Citadel. Oglo says, you ready? You ready for the rocket? Space Apes, if you're ready for the rocket, drop some fat rockets and astronauts in the chat, just like Oglo here. Griffin highlighted how an oblique tweet of a McDonald's ice cream cone and a frog emoji from Ryan Cohen, a big GameStop shareholder, appeared to be the spark of a doubling of the stock's price. I don't think that's going to be easy to prove in court. I tried to bankrupt your favorite store, and they took that personally. Oh, no. Increase in endgame DD. We get it. You're excited for the endgame. Want to know a little secret? We won't know when the endgame is until it's over. People say it keeps going endgame now in a week or a month. We don't know when the price ends up being. We don't know what the time frame will be. It can be today, tomorrow, or a month from now. All we know is at some point, bubble goes pop. We don't know when or where. Oh, real Mr. Miggs, good vibes. Love the mix on this channel between the chat and you. Keep it up. Let's hodl. No, I appreciate that. That is major appreciation from me. GameStop still testing on that 187. We'll see soon the opportunity for GameStop to either push through. AMC, on the other hand, has pushed through to 1036, which was the support that was giving it trouble in the pre-market. A resistance level, support turn resistance level that was giving AMC trouble in the pre-market to try to rise back up against after dipping below it after hours in the pre-market. However, now it is on a major rip runaway here at 1050. Ooh, major tendies on the way. Let's see. Major tendies on the way. Okay. Okay, so the ship is unstuck, says Shane Fanning. Yeah, this could be likely good news for the entire market, which we know the market itself may run inversely to GameStop. However, that's more GameStop's doing than the market. Likely when the market goes up, GameStop will also take the benefits here. AMC currently is at 3% up on the day with this massive green candle. However, unfortunately, I think that this is likely going to be overbought soon. This is an RSI that is pushed past 70. We see a major divergence between the MACD and the signal line, which is coming down as we speak. Now that volume here, how much volume we got right out of the gate? We had a 1.5 million volume a minute, and now it's just teetering at around 500,000 a minute. Now that usually is for the first 15 minutes, I suppose, but it's usually not the case that AMC starts slowing down so early. We usually see a couple more million volume minutes before it starts to slow down. Logan Wynn, how do you tell when a stock hits the peak rather than a slight pullback for the next leg up? That is two major indicators that actually we are going to start investing in a brand new interface, not just WeBull. WeBull, of course, is a free interface you guys can have right now. If you guys haven't gotten your 2 free stocks by pressing the link that is pinned in the live chat or the link down below, that is how to get this technical setup like me. However, we are going to start a partnership with a brand new set of indicators that gives us a better sense of exactly when the peak has arrived. Normally, that's just going to have to be like identifying patterns. However, one of the things that you'll note is that when this peaked around 77, that is one indicator of it being overbought. And one of the things that you can also pay attention to on the if you are trying to scalp a day trade on the minute or 5 minute charts, you could see that the MACD is starting to converge with the signal line. And anytime that you see that the slope here, right here, is a much steeper slope than the next minute, if you notice that early, you would be able to get out of AMC if you were scalping it, of course. We, of course, aren't buying and hodling. Okay. SI upwards of 2,000%. Take this with a huge cannon of salt. We talked about this over the weekend. The SI could be more, it could be less. Kenny is rubbing it off on even this stock is a beta. We saw Kenny rubbing it off on some stocks. Seems that the current GME beta is at -23, as you guys mentioned earlier. Big numbers in TOS. So first of all, check this. The post goes into why we see a huge volume pop on TD TOS for GME, a huge volume pop for TD TOS for other stocks. We see volume column for no buy sell orders lodged against it, and why this volume can't be used to calculate short interest, potential prices, or whatever other. Things to keep in mind. Right now, this entire thing is psychological, and you may think to yourself, what? Let me explain. People have seen they control the price. No, this is spiraling more and more out of control. They can do anything. I think they is like the hedge funds here. At some point, they're going to have to pay the piper, right? Val and Margulis, all shorts must cover. We own the float. Smart way to get people to stop buying. We stop buying when the pressure falls, buying pressure falls, meaning that we can short it back down and done. Remember, they were never planning on covering their shorts. The only way they can win is if GME equals 0, and this is impossible now. So this is the current fight for perspective. So this is why we have to keep these things in mind right now. This is taking too long. People, seriously, have you never had to work for something? It takes time, patience, and effort to change things. This won't come overnight, and it won't be easy. Okay, so that's a couple of things to keep in mind. I don't want to lecture you guys, though. Be excellent to each other. Be nice. And that's it. Now, one edit here. So the more often we see these things about options, the more this makes the head hurt. This is something that has been discussed before time and time again. It seems there's a possibility that shorts can be hidden in far out of the money calls. Now, they can't or won't tell you what to do, but if you use options, be aware you might be helping the hedgies. Now, that's something that we noticed. $800 far out of the money calls on Friday. They're still here, right? Because they didn't expire on Friday. But that is rising up to a couple $1 million worth of calls that is higher than $500. And if they're expiring anytime this week, it's going to be quite a moonshot, let's say. GME interview tomorrow with a possible GME catalyst incoming. Okay, so we have a couple of things to note here. October 2020 is a possible catalyst, the iron to the nitrogen and the hydrogen. GameStop has an interview tomorrow discussing their future with the same firm that they had interview with when they announced the Microsoft deal in 2020. Tomorrow's announcement also includes Amazon, WMT, BBBY, and has linked tickers to tomorrow's announcement. Major announcement tomorrow. Let's see if this becomes a major catalyst. Okay, so I'm going to go around and answer some of your questions in the chat if you have one for me. We are noticing that AMC comes back around after a major impulse, bringing us up. How long was this? From 1013 to 1060, that's about 50 cents. This could likely be part of a larger subwave here. So pay close attention to how this AMC gets either supported by the VWAP or dips far below it. If it does get supported by the VWAP, something that we should note is that the RSI is likely going to stay middling at around this 50 or so range. Right now it's at 53.5, and the MACD line is likely going to start diverging away from the signal line again. But watch it, because this could easily turn into a full-on corrective wave. GameStop, like its actual brother, twin brother, tandem riding, it currently between two levels of resistance and support, just hovering against that VWAP on the positive side. I gotta wet my whistle in terms of water. Okay. Rohit, I have shown my positions many times on GME and AMC. However, that's the most important part of it, is that the more information that you give the hedge funds about your positions, that is starting to become even a message that we should not do on Congress, right? Alexis Goldstein said specifically that Redditors are giving hedge funds too much information by sharing their positions online. Ooh. Citadel's Griffin warns of inflation risk to markets enjoying retail trading boom. 42 minutes ago. Financial Times. This is the actual 42 minutes ago? No, right? This is an archive from the 28th. So this is from today. So this is from yesterday. Chris Rake is coming on in. Oh, wait, hold on. I missed the super. Okay, Jonathan Locke says, please, broski, a little bit of insight into NRZ. Okay, NRZ is coming right after ammo. And Chris Raka says, good morning, fellow apes, rise and shine. Let's ride it to the moon. Loki Noki says, my wife's boyfriend asked her to smash. I just want to smash that like button. Everyone, just follow Loki's advice. We are 200 away from 1,000 likes on this video. I really would appreciate it. We have this video about Kenny G in just a second. However, I want to be able to cover ammo and then NRZ. So these are going to be the two quick notes, and then we're going to jump right into this article here. Here's what I'm going to do. I'm going to put the article up here, and now we can look at POW. So really briefly, let's look at ammo here on the daily chart. Jun Chong says, I'm the man. No, Jun, you are the person, man or woman. Let's see. Okay, so POW has gone to a high of $10 very recently, back in mid-February. This is after contesting that similar one at 893. Now that's something that is a little bit V-shaped, a little bit bimodal, a little bit of a bicuspid. However, that's something that you should notice is that this is a cup and handle forming right here with the second side of the lip actually contesting a higher level of resistance. And let's see if it's too much higher. $9 compared to $10. I would say that this is likely going to be the same psychology, although may not be the same pattern as a cup and handle. So that's something to focus up on. This long widening tail here is now far below halfway up the cup. So that is something to also consider, is that this tail, this handle here, is been a month long, so it's longer than the actual cup itself. So that's something that may or may not hold if it dips below the bottom of the cup, of course, like it almost did here in mid-March. That is something to be really careful about. Let's see some news about ammo. Oh, Supreme Court eyes landmark gun case. Okay, so be careful, because even this morning we were talking about the current White House administration taking aim, pun intended, at the gun industry. So I would say that right now this stock is not at its lowest point. I would say that a much safer entry point is back when it contested this level of support twice at around $5 flat. Or $4.75. That would be a much safer entry point. However, do keep in mind that if you are trying to swing trade here, all it depends on is the MACD sliding above that signal line. That is when I would think it would be a good reversal play. However, as of right now, be careful. There are major news catalysts in the way. NRZ, and then we're going to go back to Kenny G. Good morning, says XOL001. How's it going? Alan S. says they need to sell $75 worth of a share to have funds for transfer. Oh no. Well, did you know that WeBull covers that fee? I'm pretty sure if you transfer over and get your 2 free stocks. Pretty good deal. So let's see. NRZ, new residential. Oh, a little bit of a disconnect here on the daily chart back in November. So that's a little bit wild. This is one of the hardest floors I've seen. This is some hardwood flooring at 925 right there. So this seems not only multiple weeks of trying to test 925, but multiple, like just so many taps. Usually a triple tap will do it for me, but 1, 2, 3, 4. Just 3 or 4 depending on if you guys count this. That is a ton of chances for the stock to fall, I believe, to 925. As of right now, I'm not sure why they would have 100% buy, because it doesn't seem like right now it is in a position of reversal. It just seems like it is nice, healthy growth that is has a solid ground. So I would say for the 4,000 of you smashing that like button right now, if you are looking to enter this, I would say a reversal play should come right here in this chamber. But as of right now, the stock is roughly 70 cents or so away from these two levels of resistance and support. I would say the 100% buy is likely based on trends in the real estate market, and not so much trends based on this momentum of the stock itself. And also be careful, there are actually major risks and rewards past a dip around this exact time. It's because that was the pandemic dip there. Okay, so bringing it back to Kenny G. Andrew Harper says, can you look at ASO and know your opinion? Okay, ASO real quick, and then back to Kenny G. Academy Sports and Outdoors Inc. Ooh, okay. So I would say right now that it it's broken out at 1253, or IPO'd at 1253 back in October, and then it's just been on a pretty healthy growth cycle since. Major overall on the daily chart, we are seeing major impulse waves with maybe a minor correction here, but this is honestly more consolidation, and then more consolidation upwards here. I would say right now that if you are already holding, this is a solid growth stock because the RSI never grows too volatile to cause a corrective wave. So this is just slowly grinding upward. However, based on how it seems to have broken out around up to $15 roughly, and rose about 40% up in the course of 3 months. 3 months, 40% growth. I mean, it's no GameStop, but it certainly is on its way up with less of the emotional strife of GameStop. So as of right now, ASO, I think that it is a pretty solid hold, although I'm not sure if I would enter here based on news catalysts that I do not know about. Okay, Kenny G time. NUE, you are on deck. Okay, so we have Kenny G trying to take the blame off of GameStop, and GameStop is making a rip for it. 191.99 is the brand new high of the day. Love that we came off of the other stock talk to just see our boy taking the wedge very, very well, making a run for 200. Remember that battleground, $200 right here is where we, let me refresh this, going to see major conflict here. A big generous, okay, what the heck, a generous super from Tilt Fam Good morning. I was that noob that let my 53 contracts 490 strike expire worthless after being down 97%, being up 400k. Expired worthless, but I rolled new ones over. A lot of people don't know this, but they also benefit hugely when and if what? When and if what? Will he ever finish the super final next time on Dragon Ball Z? So this stock has ripped all the way up to 193. Let's see where this would have brought it into. $1 million worth of calls are now in the money. However, $500,000 of puts are also. This is roughly a wash because calls outweigh puts 2 to 3, but then puts outweigh calls 2 to 3 here from 185 to 190. So right here is going to be some contesting to see if GameStop will be able to push past this pretty large put wall of $5 million here. There is that ramp that also exists. It's going to be kind of playing against each other later on today. Kenny G. Robert Boyton says, I tune in and watch you every day, and you've taught me a lot. Any chance you can look at Snow? Bought in at 225. What are your technical analysis thoughts? Yeah, 100%. We're going to look into Snow in just a hot second here. Seriously? Yeah. Okay, thought so. All right, so Andrew being a weeb again. Those darn weebs. Okay. Kenny G warns of inflation risk. Hey, have you ever gaslighted an entire economy, an entire group of people into thinking that you didn't destroy the world economy even though you are likely going to be at fault? That's Kenneth Griffin here, Citadel's Kenneth Griffin on Financial Times, telling us how he is not going to take any of the blame when your retirement funds and your grandparents' retirement funds dry up, when the mixed squeeze happens, the margin call squeeze, coined here for the fact that certain hedge funds are going to get margin called as the price of AMC and GME start rocketing, and they have to take their thumbs out of their many pies that they have been sticking in, because they need to take all their money out of the other stocks and buy into GameStop. As we speak, GameStop is on a rip up to 192, and let's see how long it can go for. We are noticing AMC and GME take a little bit of a paper-handed detour, but on major recoveries right here, beginning of the day. Neither are on double digits quite yet, but both are roughly around 4 to 6% up on the day. And we need scissors in the chat and down in the comment section for that. All right, let's focus up on exactly what Kenneth Griffin is going to try and explain away the whole financial crisis here. The retail stock, okay, let's see. Stimulus could jolt inflationary pressures back to life. Top hedge funds managers warn. Remember, guys, that live sub count is right there. I would love it if we can go all the way up to 75,000 today. And with your help, I'm sure it's going to be very, very likely. So smash that subscribe button, that bell button, and that like button before we keep going. The retail stock trading frenzy will reach a new crescendo in the coming weeks thanks to the U.S. government's stimulus checks. But the inflation this support could ignite represents a threat to the stock market bull run, according to Citadel's Kenneth Griffin. The founder of one of the world's biggest hedge funds thinks the $1,400 sent out to millions of Americans this month will likely fuel another spasm of retail trading before activity settles down to a still elevated level. Amateur trading could remain a powerful feature in U.S. equities, he said. Spasm, okay. I would say right now that he is already bearish on the fact that $1,400 spent to help people with their rent, help people with their food, and help people just survive is likely going to cause for him a bad stock market, a stock market position that he doesn't want to be in. Already doesn't make him painted out to be such a good guy. However, in a rare interview with Financial Times, Griffin warned that huge amounts of central bank bond buying and government spending could jolt U.S. inflation out of its decades-long torpor and unsettle financial markets just as they were attracting more retail involvement, right? It only hurts the market when the smooth-brained, uneducated apes come in and don't know what they're doing, like spend all their money on GME and AMC. Is this where we're going to? Given the incredible amount of stimulus that has been unleashed, there is a possibility we see real surge in inflation, Ken Griffin said. The question is whether it is transitory or becomes permanent and structural, and there is a much higher chance that it becomes entrenched than any other time over the past 12 years. On the whole, Griffin says he is optimistic on the outlook and hailed the retail trading boom as a way for more Americans to benefit from the U.S. stock market. But he warned of a doomsday scenario. Did he really? This is in quotes. He warned of a doomsday scenario in which accelerating inflation deepens a bond market sell-off, sends stocks tumbling, and stokes unrest among retail investors hurt in the process. I cannot make this more clear. He is saying that the stimulus check and you, in particular, are going to be the reason why the market crashes. Not because he, as has a margin called hedge fund, is going to be taking all of his money out of every stock. You are the reason that the market is going to be broken up. Neener, pumpkin eater. I'm the one that is trying to save it. This is the greatest amount of public opinion swinging that I can possibly imagine. This is ridiculous because he knows that this is likely going to happen. We already covered that Citadel is not hiring anymore. A healthy company that doesn't care about the next batch of employees coming on, right? The next guard. Take GameStop, for example. They are hiring more and more, and they are expecting thousands more headcount just this year alone. So put your money where your mouth is, Kenny G. Michael Rake says, what is your thoughts of a nightmare situation of government stepping in and delisting GME to prevent a market meltdown? I think that that's a good amount of FUD. First of all, that has only been talked about by pundits and the Jim Cramers of the world, right? Likely that is going to be something that will not happen, right? And for now, you don't even have to understand why what the implications are if that does happen for the purposes of this article and for the purposes of moving into the actual flows of how the government works. Likely, they're going to have to bail out at least some of these hedge funds, like they did back in 2008. However, when they do, the people that they'll be paying tendies to is the U.S. government paying them through the hedge funds directly to you, the people that are buying and hodling. Not financial advice, of course. This is just me as a smooth brain sharing a banana with when the banana is financial education here. So U.S. inflation expectations have jumped sharply in 2021. So we are watching obviously inflation drops to an all-time low in the beginning of the pandemic and then slowly rises to one of the all-time highs in the coming 5 years as derived from inflation-proofed treasuries as a percentage. Okay, so 2.5% right now. That is a big fat percentage point, and we even seen Jerome Powell talk about that live. Fears over inflation are growing across the investment industry, with accelerating price gains and bond market tantrum highlighted as the biggest risks that markets now face in Bank of America's latest monthly survey of investors. The percentage of investors expecting faster inflation over the coming year in March hit the highest since at least 1995 when the survey began. Citadel is one of the hedge funds industry's largest players, managing about $34 billion. Okay, so this is kind of the number that I've been playing with, roughly, maybe one sig fig off. Its flagship fund returned 24.4% last year despite the turbulent markets, and this year it was up 5.2% to the end of February, according to the people familiar with the matter. Over the fund's 30 years, it has averaged annual gains of 19%, burnishing Griffin as one of the hedge fund industry's biggest and most consistent performers. And consistency is something that we all know Kenny G has. Retail trading now accounts for almost as much volume as mutual funds and hedge funds combined. Okay, so we are the whale now. Look at us. We are the whale now. We have the technology, we have the popularity, and perception is king, as you all know. However, Citadel recently found itself embroiled in the controversy surrounding GameStop. We got a shout out. The video games retailer whose stock was whipsawed by hedge funds betting against it and a horde of bullish retail traders loosed, organized on the WallStreetBets forum on the social media site Reddit. Bullish, excuse us, we are apish, and that is why we need gorillas in the comment section right now. The The fund stepped in to bail out Melvin Capital, one of the biggest hedge funds betting against GameStop, when Robinhood, a brokerage popular with the new generation of retail traders, was subsequently forced for regulatory reasons to curtail trading in GameStop. Many Reddit users seized on a conspiracy theory that it was at Citadel's behest. Citadel Securities, a separate high-speed market maker also owned by Griffin, is one of Robinhood's biggest revenue sources, paying it for the right to execute the trades of its customers. We talked about payment for order flow a ton. We talked about it a ton, and how Citadel Securities is making money off of stealing your data. And by stealing, I mean truly, this is your data. They are taking the information, betting against you, making you a loser in the process of just participating in the market. And that's right here, taxation without representation. If you guys want to hear more, we covered it over the weekend. The firestorm led to Griffin testifying at the House of Representatives Financial Services Committee hearing on the GameStop saga last month. How many people are inside that room with you, Kenny G? Please tell us. Although Robinhood attracted the most ire and Griffin testified that Citadel had nothing to do with Robinhood's decision, he did not escape unscathed from opprobrium from some representatives. Now that's one of the major pieces of this pie, is that Griffin came on, he's like, oh yeah, we just bailed out Melvin. You know, we're just a larger hedge fund looking out for our little bro, and the DTCC is an even larger purse string organization that says, nah, we're not going to take care of you, right? You thought that you taking care of Melvin means that we come in and take care of you? No. And that's where the new regulation for DTCC is going to make it apparent that nobody's coming for you, Citadel. You're on your own. Griffin largely shrugs off the controversy as a social media concocted tempest stirred up by populist politicians. Now that sentence, say it 3 times fast. But he also argues that the saga foreshadows a wider, thornier problem of what happens when retail trader and passive index funds start to dominate more of the stock market, with prices becoming more detached from reality. Ooh, inflation erupts. Hold on. Inflation erupts as investors' biggest fears. Oh, sweet. So this is largest market tail risk by percentage of respondents. This is a survey of what they are afraid of. So we have inflation as one of the biggest fears, and then coronavirus. We have 2020 U.S. presidential election, which kind of tells you how old this is. Oh, this is a timeline. So right now, most people are afraid of inflation. And all of 2021, prior to that, people were afraid of the coronavirus. Then, I guess in November, the U.S. 2020 election, and then the trade war, right? Which we had for a good amount of time, quantitative tightening, political populism, wow, because that's what we cared about in the beginning of roughly 2017 to mid-2018, and then China hard landing, geopolitical crisis, back to China hard landing. In 2013, we had the US fiscal cliff, and in 2012, had the EU sovereign debt fund. Remember when things were boring? Yes, things were boring before things got very weird very fast. The US equities, passive funds are now roughly as large as the actively managed investment universe after a decade of rampant growth, while retail investors now account for nearly as much as all mutual and hedge fund trading combined. So big snaps to you guys for jumping on this trading thing while it's hot. Griffin highlighted how an oblique tweet of McDonald's ice cream cone and a frog emoji from Ryan Cohen, a big GameStop shareholder, appeared to be the spark for doubling of the stock's price in one afternoon in February. This is a huge allegation. Let's be clear. This may seem like a benign little paragraph inside a larger article, but this is essentially Kenny G pointing at this tweet that Ryan Cohen said of literally just an ice cream cone. Let's look at it. Oh, okay. Well, you guys know what tweet we're talking about. It is literally just a McDonald's ice cream cone from Ryan Cohen. There's a lot of ways that we interpreted it, but when the price spiked after that, it should be noted that Ryan Cohen, if he meant anything by that ice cream tweet, would be in serious trouble, right? By SEC regulators, by a bunch of other financial regulators, right? Because he is now someone who cannot speak on behalf of the stock, can't speak very much at all about anything while he is transitioning into his role, and that is something that Ken G is trying to push as a narrative. That look at the ways that Ryan Cohen is sparking these spikes, right? It's clearly Ryan Cohen's fault, and of course when something bad happens, which inevitably will soon, they're going to try to throw as much as they can to Ryan Cohen for causing these sparks here. The fact that the tweet of an ice cream cone can move markets will be the subject of academic study for years, Griffin said. It represents a dynamic where certain stocks are now almost exclusively owned by retail and passive funds. You've taken out active investors who focus on traditional metrics in valuing a equity. So, do you agree with what he's saying? Right? Is the markets now fundamentally different, super scary and different now that people like you and me are investing? People who have learned how to invest for the very first time, and people who are building out their financial education by joining this channel, pressing that subscribe button and that bell button. First of all, I want to thank you so much for getting to the end of this article. We had a lot of information to unpack here, and that is why I want to be able to thank the people that make this video possible. I didn't get a chance to update this last night yet, but it will be updated in case you guys want to be able to join the Moon Platoon, Meatball, Space Legend tier, or the Gorillionaire tier by pressing that join button down below tonight. And for as always, we will see you in the money. Okay, so that was that article. I believe NUE is on deck. One second. How's it going, guys? Is everybody having a good day? We are here with 4,400 of you, not 4,400 likes yet on this video, but of course 4,400 of you, 120 subscribers away from 74,000. Would love to see that happen during this stream, and just a lot of stocks to talk about. We have GameStop and AMC seeing a major push in the beginning of the day. GameStop in particular had a major wedge to break out of. We saw that breakout happen basically as we drew that wedge, and we have a 1, 2, 3, 4, 5 part impulse wave breaking down into a corrective wave here. It was not over for AMC. Of course, we saw a minor correction that actually was just a subwave to a major impulse. Also a 1, 2, 3, 4, 5 wave impulse here from a breakout of 1017 to 1013 to 1076. That's roughly a 60-cent. That's roughly a 60-cent impulse wave that we should likely see again if we want to push AMC past $11. Leroy Johnston, what's wrong? How can we make your day better? Neil K says, watching your stream at school. I appreciate that. We have here some stocks are entirely owned by retail investors. Yeah, we are the whale now here. We are the whale. Okay, so we have that ice cream tweet here. This is I was missing a big piece of the puzzle. However, this is a very long story. But let's look at the too long didn't read. The shorts are in a death spiral of borrowing to cover FTDs and using HFT trading tactics to cover the remaining FTDs that the borrowed shares could not. Whales are on our side, but are putting their effort into controlling buy-sell pressure on certain days to inflict max pain on the shorts option spread. Okay, so this is under the impression that whales are actually on our side. The price action we are seeing is largely made up of HFTs, retail, the odd day trader or two. This ain't financial advice. Okay, so this is a very, very long article that we can cover in just a second. I'm going to cover NUE. If you guys have a ticker symbol you guys want me to cover as well, we are going to give GameStop and AMC our full attention in just a second, but I do want to be able to cover some other stocks in case. There is also a story. Hold on. Missing a key piece of the puzzle here. There's also a story about Cathie Wood's ARK purchasing 1 million shares of Open Door, which is kind of interesting. And WallStreetBets has basically entirely stopped talking about GME, at least over the weekend, which is interesting. Very interesting. Okay, so let me do NUE, and then oh wow, should have done NUE in just a couple of minutes ago actually. So let's see, on the minute chart, hasn't seen that much of a breakout yet. Oh, look at those beautiful impulses here. So double topping off at $82 for the day. NUE is a bit of a tricky runaway beast. On the 30-minute chart, you can even see that it has basically seen only gains since 48 bucks in the beginning of February, right? We are seeing, I would think, abnormally bullish growth here, new core, and it continues to reflect today as well. One of the first thoughts is that if this had to struggle at this level of resistance here at $72, that struggle lasted double top here, 1, 2, and then 3 2 days later, and then it never looks back again. So there's not a ton of, I would say, market deliberation, like people trying to figure out exactly how much the price of the stock actually is worth. Even here, there is double contesting of $63, and it never gets spoken of again. So I would be cautious because this stock seems like it doesn't have a lot of breaks in the way. If it drops back down, that's the kind of current risk profile that I'm currently looking at. In terms of reward, I think it's at its highest peak as for years now, right? So $82. I would say that I would brand the stock firmly as a runaway stock here because of the lack of clear resistances and the current bullishness. I would say would either be connected directly to a news catalyst or, oh, here it is, shows signs, every sign of being significantly overvalued. I guess I'm not alone in that analysis. I would say right now, watch for nuclear to fall below 70, and if it does and sees a reversal, that would be indicated here in the MACD on the daily chart. I would say that that would be a good place to jump on in. Chewy TA, please, says Diamond. Okay, let's look at Chewy in a sec. I think someone talked about Etsy before, so I'm going to do Etsy first, then Chewy. All right, Etsy. Oh, interesting. So look at that head and shoulders pattern here. They're testing that 186, seeing a high of 251. What's up, Kenny B Music? Thank you for joining the Moon Platoon. You are going to be on the end screen for a whole week. Thanks for joining it, because Mondays we are updating that end screen list. If you guys want to be also featured in the end of these videos, then go ahead, hit that join button, or go head on over to Patreon. 156. So there is this 156 level of resistance here that was resisted before and then quickly became support. So right there, I'll say there's an ascending level here. So there's ascending levels of resistance and support starting from 150 all the way up to 196. That's a $45 rise from November to now. So that impulse is indicative of a future macro impulse. We should see another $50 rise once this correction finishes. However, if this correction is finishing like as of right now, then we could expect a $50 rise to begin with right here. Otherwise, a conservative reward is jumping back to 250 here. Or if we take that this is a period of consolidation with a bearish candle here, we could start to return to our exponential moving average. Right now, it just seems like Etsy is trading above, punching above its weight class right now, and that's a dangerous place for Etsy to be in. I would say an attractive price would be where it was supported before at 167, or at the very least waiting until 189. As of right now, I would think that there's a mental barrier at 200, which is something to consider if you're trying to scalp Etsy. If it does raise above $200, that might be a strong rip that you could take advantage of, but just keep the MACD line on the minute and 5 minute chart close in your mind to jump off. If you're looking for a long-term play, I would say a more attractive entry price is closer to the exponential moving average here at around 160. I would say that that is a very, very conservative entry price, but I'm a risk-averse person. What can I say? So, oh, Palantir. People are talking about Palantir. I could look at that in a sec. Chewy. And then back to GME and AMC. For technical analysis, will GME and AMC catalyst updates. Okay, let's switch up the title today just a little bit. We have Daniel Lesage saying, looks like Vanguard has something strange going on. I can't buy on website, and a quick Reddit search confirms other people are having this problem as well. Drop some scissors in the chat if you are also having trouble with Vanguard. The real Mr. Mig says, have you heard about the announcement by Credit Suisse and Nomura? They are exiting their positions due to significant losses. Ooh, I have not heard about that yet. That sounds very cool. I'm going to look that up. Credit Suisse and Nomura. Oh my goodness, is this the squeeze? Likely not. Is this the mixed squeeze we've been talking about? Man can dream. A finishing blow, an end to the shorts. Oh, here it is. Nomura Holdings liquidation imminent. Oh, this is dope. There's a Goldman Sachs $10.5 billion sell-off. Ooh. Okay, this is starting to get really. Whoa, this is starting to get. Whoa, this is starting to get wild. This is starting to get really crazy. So you guys look at this. As we speak, shenanigans are happening. From the Archegos fiasco, Nomura $2 billion, Credit Suisse $4 billion. Oh, so this is the Archegos fiasco here. Okay, so I gotta look at this. Okay, I see now. Look at this post. It goes into detail on who they are and what might be up. Archegos Capital is a hedge fund that is potentially going to collapse, and there's a possible link to GameStop. The mixed squeeze! It's coming! The mixed... Okay, so mixed squeeze we're going to cover in just a second. The margin call squeeze. Holy moly, this is exciting as heck. Nothing definitive yet, because it doesn't seem like these are directly attached to... There might be some... Excuse me. There might be some GameStop stuff happening here, but there may not be. So take it with a grain of huge salt here. But we have the Reuters article, Credit Suisse warns of significant losses from exiting hedge fund positions. I'm so excited. Hedge funds are feeling the hurt right now. And you thought the SEC was silent. It's kind of spooky. Credit Suisse was involved in the latest margin call. That's not irrelevant yet. Is this just a significant US-based hedge fund defaulted? Okay, so this is the same news twice. But Archegos Capital is a hedge fund that is potentially about to collapse. Ooh. This is exciting. Having fun here. And then what was this one? Oh, this one is the Nomura is also going bye-bye. Oh, this is exciting. Okay, so we have this set up, but let me go through Chewy real quick. What is the mixed squeeze? Asked Leroy Johnson. It's the idea that right before the short squeeze, the mother of all short squeezes, there is going to be a period of time where we can actively see the short squeeze coming to fruition when the GameStop has tumbled back down to 183. Come on, GameStop. Come on, old Bessie. So when the hedge funds get margin called one by one, it's going to cause the price of the stock to even jump further one at a time. And that is just active confirmation. Because we get short information so slowly, we can see that these hedge funds getting margin called will happen faster and faster. And this is an easier way to access information. It's kind of like seeing, like if you don't have the ability to see like, what is this like? I'm thinking of random analogies and they're all really bad. I don't know, chicken pox. Like you don't know if your kid has chicken pox until they start to show symptoms, right? So right now we don't know if the shorts have been covered, but we can know if the short squeeze is coming when these hedge funds start getting margin called and defaulting. That is one of the only symptoms that we can see because of the lack of information that we have. That's a good point. I'm going to cover that. Hey guys, there's 110 more subscribers until 74,000 as a quick reminder. It's pretty cool. Learning is very valuable, says Andrew. I agree. It's a McDonald's milkshake, the McSqueezy. Okay, actually, wait. Do I have that McSqueeze picture still? No, it's all inverse now. Okay, I'm gonna find that McSqueeze photo. Whoa. Whoa, I said McSqueeze. Oh boy, this one's big. Alright, the McSqueeze. Boom. Okay. I guess I'll do Chewy in a second. So Chewy, you're on deck. In just a hot second. I'm gonna do a Michael from Vsauce thing. So it's gonna go like, hey, Moon Platoon. McSqueeze. That was pretty bad. Okay, let me try again. Hey, Moon Platoon. McSqueeze. What exactly is that? Well, we've covered it before, and this time around we have some major news about whether or not it's actually coming to fruition. We have a couple of articles tying together Credit Suisse, Archegos Capital, and Nomura in a series of hedge funds that are going bust. And we've talked about that McSqueeze video. If you haven't seen that yet, we'll try and link it down below so you guys can find out about what the margin call squeeze is. It's kind of an indicator of what we cannot see, which is whether or not the mother of all short squeezes is beginning, right? We have Credit Suisse warning of significant losses for exiting hedge fund positions. This is by Reuters, and we have Archegos Capital to kind of envelop the entire story. You guys want to follow until the end of this video. You guys want to be able to learn as much as you can by smashing that subscribe button and that bell button, and most importantly, smashing that like button so that more apes and Moon Platoon members just like you find out about this video. I'm not a financial advisor. I'm just a smooth-brained ape looking for a banana, and I'm hoping to share some of that financial education with you. So here we go. What exactly is the margin call squeeze? Well, it's an ability for us, since there's so little data about the shorts availability and the shorts coverage, that we have to be able to wait for the FINRA report as a source of truth every 2 weeks, and then there's a 2-week lag. It's terrible. There is one of the major pieces that we can see, which is, are these hedge funds getting margin called? That is the margin call squeeze. Each time a hedge fund gets margin called, it's because they had a different amount of money, a different amount of total asset value that would cause them to get margin called. And on the way up to the tip top, let me switch this to GME, as GME starts rolling higher and higher, it's going to force more and more of these hedge funds that have short positions in GME to get margin called. So let's focus up. Let's start with that Reuters article because it's a little short here. Credit Suisse warns of significant losses before exiting hedge fund positions. Credit Suisse's first quarter results could suffer a material impact after the bank started exiting positions after a US-based hedge fund defaulted on margin calls it made, the bank said on Monday. While it is this time is premature to quantify the exact size of the loss resulting from this exit, it could be highly significant and material to our first quarter results, right? This likely is, this has the ability to be relevant to the mixed squeeze, but as a reminder, we don't know exactly what these hedge funds positions are, right? We just know that hedge funds in a row, quick succession, are starting to default. Credit Suisse, we have Nomura in a second, and we have Archegos Capital. Okay, Switzerland's second biggest lender said the unnamed hedge fund defaulted on margin calls made last week by Credit Suisse and other banks. A margin call is a demand from a broker to add more money to an account to cover potential losses, right? And by add more money means sell your positions. Following the failure of the fund to meet these margin commitments, Credit Suisse and a number of other banks are in the process of exiting these positions, Credit Suisse said. Credit Suisse said it would provide an update on the matter in due course. This warning is a further blow to the bank, which is considering compensating investors hit by the collapse of funds linked to insolvent finance from Greensill. The Swiss lender this month closed around $10 billion of supply chain finance lines that bought notes from Greensill. On this, $3.1 billion has so far been repaid, and more than $1.2 billion in cash remains in the funds, leaving more than $5 billion outstanding. We know that they can try to find more money. However, these are still just little individual macroorganisms of greed and malice. But to be fair, organisms all the same. They need money, they need to stay liquid, and ultimately, when the price of certain of these stocks that they have short positions on goes too high, this is the end of the line. Another leveraged hedge fund is about to go bust and puke blocks. Nomura Holdings liquidation imminent. Here we go, right? There's a news release from Nomura themselves. Tokyo, March 29th. Today, announced on the 26th, an event occurred that could subject one of its U.S. subsidiaries to a significant loss arising from transactions with a U.S. client. Nomura is currently evaluating the extent of the possible loss and the impact it could have on its consolidated financial results. The estimated amount of the claim against the client is approximately $2 billion based on market prices as of March 26th. This estimate is subject to change depending on unwinding of the transactions and fluctuations in market prices. Nomura will continue to take the appropriate steps to address this issue and make a further disclosure once the impact of the potential loss has been determined. As the end of December 2020, Nomura maintained a consolidated common equity tier 1 ratio of over 17%, which is substantially higher than the minimum regulatory requirement. Accordingly, there will be no issues related to the operations or financial soundness of Nomura Holdings, blah, blah, blah. So this is another sign plus the Credit Suisse, and you might think, okay, coincidence, maybe not. Archegos Capital is a hedge fund that's potentially about to collapse. There's a possible link to GameStop. We are almost at the finish line. Remember, smashing that subscribe button helps these Moon Platoon apes that have pledged to buy more GME reach their goal, 77,777 subs for Jesse B Trucking, and we have 87,000 subs for James Rudy. Let's get up there, ladies and gentlemen. Thank you for supporting your fellow Moon Platoon apes. Too long didn't read the bottom for the stupids. Not saying that it's you guys. I'm going to start talking about 4 companies in this post. We have Archegos Capital, GameStop, Tiger Asia, and Tiger Management. And of course, not financial advice. Who is collapsing? Seriously, Archegos Capital Management is a hedgie, and on Friday they got margin called. Google them and read an article about them, but in summary, stocks like Viacom and Discovery Channel tanked on Friday, triggered by a huge sell-off by Archegos Capital. It has since come out that they were margin called and had to sell to stay afloat. Imagine this, but throughout a ripple for all stocks that is not GameStop or AMC. Imagine that is going to happen to a huge amount of stocks, not just Viacom and Discovery Channel, okay? If you don't know, margin calls when the bigger boys than you, banks, say, hey bro, you ain't got enough money to keep the high risk trading, sell some now and get some cash, or we're stepping in and closing your positions until it's safe. In this case, Goldman and Morgan triggered the Archegos margin call. We'll come back to Archegos in just a minute. Tiger Management, okay? The Tiger is a hedgie and have been running for years. Now let's cut straight to it. In 2018, they sent a letter to the board of GameStop expressing concern with how badly the company was being run and it needed to turn around. This was sent in May 2018 when GameStop was trading at $14. Well, the GME board did what they did best, nothing. As a result, Tiger declared on 13F in August 2018 that they had since exited all their GME positions, aka they sold all of their stuff. Simple terms, Tiger does not like GameStop and what they're doing and warned them. GameStop ignored them. Tiger sold all of their GME stocks. The common theme for Tiger is to trade using leverage to play with some money that more money than you actually have, but they are quite good at it, right? And you could do this too. This is what a mortgage is. You borrow money and now you own a house that you can use for tax purposes like depreciation and other stuff. You end up making more money based off of good debt. And that's what Tiger Management is good at. We'll come back to them in just a second. Tiger Asia. Tiger Asia was founded by Bill Huang. Remember this name. Bill is classified as a Tiger Cub. Basically what happens, you work at Tiger Management, you make a name for yourself, you get good at being a hedgie, and then you set up your own firm, aka being a Tiger Cub. Bill Huang left Tiger Management and set up Tiger Asia to act as a hedgie himself. There's the problem. Bill is crooked. That's right. They are a very naughty cub because he, along with Tiger Asia, are subjected to a 3-year-long investigation about our favorite subject, stock manipulation. Now, Bill, if you are listening, come on the show. But just in all seriousness, these are likely important allegations that are currently being investigated in court, so should not be taken as a fact or even talked about any more than just to give you guys a general sense of what's happening here, okay? Here's a sledgehammer. The direct quote from the SEC. Huang committed insider trading by short selling 3 Chinese bank stocks based on confidential information they received in private placement offerings. Huang and his advisory firms then covered the short positions with private placement shares purchased at a significant discount to the stock's market price. They separately attempted to manipulate the prices of publicly traded Chinese bank stocks in which Huang's hedge funds had substantial short positions by placing losing trades in an attempt to lower the price of the stocks and increase the value of the short positions. Well, this is illegal this is short selling illegal stuff 101, right? Well, Bill eventually admitted to this. He was fined $44 million, a settlement, and barred from the industry for 5 years. And the bar ended in 2018. So after this annoying investigation, Tiger Asia has destroyed reputation and is seen as an illegal, manipulative short seller. So Bill does what every good hedgie does. He rebrands Tiger Asia as, you guessed it, Archegos Capital. Oh man, this is some James Cameron. This is some plot twist, end of the day, Mike Shyamalan ding dong looking naughty cheating Bill set up Archegos and continued with his trading policy of over leveraging you so much that you trade with more money than you have access to, which leads to this week's inevitable margin call and poor old Bill having to sell a ton of stocks, crashing the prices up in the process just to stay afloat. Sucks if you invested in a safe stock like Discovery Channel, right? However, you just lost 30% in a day. Guess retail lose again, and they can do this at any time with any stock. Even if the stock performs normally or better than usual, they can sell if they screw up with their bets on a completely unrelated stock. I'm sure there's a lot of boomers who got hit hard on Friday by the sell-off, but Wall Street doesn't care about that. Now remember, Bill was banned for 5 years, which means it was 2018 until he can start doing his business again. Archegos Capital registered for a trademark in mid-2019. Aside from this, there are no filings at all with the SEC, which is pretty weird, like seriously weird. Would love to find someone, but I can't. And then they Beacon sent them a DM, but he made a very, very good observation, which is glaringly obvious. They were looking for 13Fs, which disclose stock ownerships and so forth. But like Beacon said, what doesn't need to be disclosed to the SEC? It is short positions, of course. Anyway, the Archegos Capital website is down. Nobody's returning calls to journalists, and they haven't made a statement. This tells us one thing. They done goofed. Yeah, they done goofed. But what does this have to do with GameStop? Let us get into it. This is where the assumption comes in. Why would a hedgie get margin called? Well, they cannot see a recent trigger that could actually cause them to go belly up. It's not like sudden banking crash just happened. Absolutely nothing happened to the market other than these certain hedge funds got margin called over the weekend. All right, just to make it clear, there's it's a little bit up and down, and there's the pandemic, but nothing significant has occurred to suddenly make poor Bill get margin calls to the tune of billions of dollars, and nobody else is in this boat at the time, just Bill and Archegos. However, bear this in mind: the company he came from, the company which taught him everything, Tiger Management, were invested in GME. They didn't like what they saw and wrote to the board. They still didn't like what they saw 3 months later and liquidated themselves out of GME. Bill is fed up of Tiger Asia being crooked firm that it is. It pulls Archego's capital and it finishes his SEC imposed ban in 2018 and registered Archego's trademark in mid-2019. He ended his SEC imposed ban in 2018, and guess when GameStop started dumping itself down the toilet bowl? That's right, 2018. So what happens in mid-2019? That's right, GME takes an even bigger, huge poopy all the way down to an almost all-time low of 397. It drops even further down to 350 at the start of 2020. It trends sideways for a while its Phoenix-like rise in late 2020 to the point where we are now at $180. Here's the theory. Sneaky Bill learns of his trade at Tiger Management. He then goes all the way to set up Tiger Asia, loves a bit of illegal short-selling stock manipulation, but then gets caught. He closes Tiger Asia, pops straight back with Archego's capital, his parent company where he learned his trade. We're into GME, and they noped out of there when they saw it was dying in 2018. This is 2018 when Bill can start trading again because he's a reformed character after his 5-year ban. Cheeky Bill sees Tiger Management bailed out of the burning GME plane and decides he wants in on the action. We know he loves some illegal short-selling stuff. His daddy company bailed out of the failing mess that is GameStop, and he dived in to gobble up some short tendies. This is just a theory, a GameStop theory, but it does start to tie in pieces of the puzzle of what is going on this week, particularly the last 3 days with all of these margin calls in a row. Too long didn't read. Archego's capital is a hedgy. They are margin called, causing Viacom and Discovery Channel to tank. They are owned by a guy who is a crooked illegal short seller who has been banned from trading by the SEC. He loved to short sell in China illegally. He was banned for 5 years. Prior to his ban, he owned a company that was spawned from another company that invested in GME. I think the naughty hedge saw his parent company bailing out of a failing GME, jumps into the short bandwagon when his SEC ban was up. He got in late when GME was rock bottom. Now GME has risen. He might have just had a margin call based on the price of GME rising too much. Is Archego's capital the first of many in the McSqueeze? Well, let's find out. You and I. First of all, thank you big time to the Moon Platoon Gorillionaire and Meatball the Space Legend tiers for making this show possible. If you don't see your name on there yet, you will by either pressing the join button next to the subscribe button or when I update this on a weekly basis. For now, but not for forever, I will see you in space. McSqueeze! I love this McSqueeze photo. Ravenwood Concepts. His information is either in this description or in basically every description of every video. Okay, let me look through some of your questions here. Kimchi Tofu is in the chat. We have Tom R. Please link the platform that you're using for crypto. Yes, that is BlockFi. So if you guys have not gotten your really, really cool, really sweet $250 of free BlockFi yet, now is the time. Tom R. You can get $250 of free BlockFi by pressing the BlockFi link that I just put in the chat or in the description down below. It's pretty cool. Jeffrey Kohler says so that like the bank told you hedgy need more cash flow and they have to sell stuff. It's not that they need more cash because they're about to never be able to pay off their debt, right? Because you can have this go two ways. You can either owe stocks or you can owe actual just cash. And normally on your side, unless you're a short seller yourself, you're likely going to be buying on margin. Is what a retail investor could get in trouble for margin calls, which means you borrow some money from your broker. 73,900 guys, hit that subscribe button. 100 away from 74,000. So you could borrow some money from your broker, which you could do, I think, on any of these platforms, Robinhood, WeBull, right? And then buy on margin. And then when your stock goes down far enough, your broker could margin call you and say, hey, you owe us money and it looks like the stock is not going to recover fast enough for you to stay solvent, so you're going to have to sell your position. The other side of it is that you borrow some stock from people and then the stock price goes up while you already sold them when it was low. Now you are going to have to buy them back, so that is the debt. Instead of having to pay back money, you have to pay back stocks by buying them at market value. So the market value goes up too high, you don't have enough cash, then you need to exit your other positions in order to afford that stock. And they're not going to let you go higher than the total value of your portfolio multiplied by the number of stocks that you need to buy at market value. And Cal has just joined as a Mo Monkey, pressing that join button down below. I appreciate it. It's a good time. Leroy Johnston. That's a good name. Oh, man. Okay, so Sarah Squeezy Pleasy says, so you can't pay for your house and you have to sell all your furniture and try to cover it. Am I following? You can't pay for your house and you have to sell all your furniture to pay for it. Correct. However, it's kind of like your house goes up in value so much and your mortgage follows accordingly. That's the difference between a margin call for a short squeeze. It's kind of like imagine if your mortgage went up as the value of your house went up. That is essentially what's happening. You have to now sell everything in your house, and your family members also sit on your couch, but now you have to sell it. That's exactly bam. That's really good. I'm gonna make a whole short video on that. That's really good. Sarah Squeezy Pleasy. That's a really good analogy. Okay, next squeeze. Downloads. I don't know. It's gonna be screenshots. Okay, there we go. Hey, this is a quick 60-second video. I don't want to mess up in 60 seconds. Hey guys, this is a quick 60-second video about what is the mixed squeeze or the margin call squeeze, and how do you even get margin called as a hedge fund. If you can't pay for your house over here, like Sarah says, and you have to sell all your furniture to try and cover it, is this what the margin call squeeze is? Almost. Essentially, what the margin call squeeze is when you have bought your house, let's say, and your mortgage continues to rise because the value of your house continues to rise. Let's imagine in that world that your house is worth $1 million and you have to pay a certain amount of mortgage. Maybe you can only afford $5,000, but as the house rises to like $2 million, now you have a $10,000 mortgage and you can't afford it. So you have to start selling your furniture. This is essentially what's happening with the hedge funds getting screwed over as GameStop and AMC gets higher and higher. However, as you sell your furniture, other family members also sit on that couch and drink from your Brita filter, and you are screwing up everyone else. And those are the retirement funds that you are likely going to see tank when the hedge funds take their assets and stocks out, exit their positions. If you want to see more, like this video and share it with other fellow Moon Platoon apes, and I'll see you in the money. There we go. I'm thinking of making shorter content, so that's going to be something there. Hopefully that makes a little sense. Sarah Squeezy Pleasy, thank you for that excellent question. Cody Becker, sorry, I missed a couple of messages from you, but let's see what you were saying. Have you already asked if the buy system in general is unavailable for Vanguard apes, or was it lower limitations earlier this morning? People are getting a lot of system unavailability. I have heard that. I haven't seen any. You know what? Let me check my email in case someone sent me something, but I don't think I've seen any explanation for that yet. B. Barber says, can you review smooth brain ape style stock YVR? Sure. So that's going to come after Chewy. YVR. YVR. Oh, there it was. I'll just have to remember. Okay, so it looks like I don't see any. So, okay, hold on. What is this? Big info I'm about to post. Can you email me ASAP? Okay. I'm afraid of opening up myself to these channels because this is not, some of this isn't data, which is very annoying. Because you guys know how much I love data, and I don't want to be data catfished. Did Elon Musk respond to me yet? So if you guys didn't know, over the weekend we reached out to Elon Musk after Dr. Pippa showed up. So, oh look, Cody's here. Is this Cody Becker or a different Cody? Whoop whoop whoop. Okay, nothing on Twitter. Nothing on Twitter, and then let me check over here. Ooh. King Drew wants to write a theme song. Yo, that sounds amazing. What kind of music do I like? I like this type of music and this type of music. Okay, so I'm gonna say this. Okay, so there we go. Well, we might have a theme song in the future. That's pretty cool. Okay, Chewy, YVR, and then Manny Rain says, can you do a TA on TripAdvisor? I've been watching them for a while, and bullish. TripAdvisor is one of the first TAs I did on this channel live. So I'm going to look at it in just a sec. Wait. So let's do Chewy, YVR, and then TripAdvisor. Don't want to pile up too much here. Okay. So Chewy seems like it is. Oh, look at that. So look at that wedge getting formed right here for Chewy. So this is a bullish pennant. I'm sorry. Unfortunately, it's coming from a downside on the left. So this is actually a bearish pennant. So this is likely going to cause us a little bit of strife later on. Can I draw? So we see here that we're being wedged here, and if this continues to meet lower levels of resistance but the same level of support, we're likely going to see Chewy start to dip. If it does dip, I would say that it's probably going to be caught right here with this triple, quadruple tested support. And the furthest it can possibly go down is this hard floor of 22. As of right now, I don't think that it would be... It's not a great position in terms of momentum trading to jump into Chewy at the moment. I would say that right here is where it was not... It was a resistance turned into a support, so that's a good hard floor for Chewy in that sense. If at any point this actually ends up having the MACD jump above the signal line in a meaningful way and the RSI returns to around 50 or maybe even pushing against 60, then I would say Chewy is actually going to ride an impulse wave before and reverse this bearish pennant. However, right now I think that Chewy is not in a great place. YVR in the TripAdvisor. Whoa, hubba. So $7.50. Okay, so it's halfway down on its high. So it's currently trading at $3.90. Let me zoom in a little bit more. TripAdvisor in just a second. So YVR has this large slope trending downward pattern for exponential moving average. I would say that one of the first things to point out here is the the transition from this support level to resistance here at $4.70, and you're currently trading above it right now. So that's something. Let's get out of the 5-minute chart. So you're currently trading, so that also was a hard resistance before they traded into a solid resistance now. So that line is like the golden line for YVR in the near future. In terms of where it's trading now, I think that's actually a fair entry point if you expect a catalyst in the near future. That here is the downside So the risk is dropping down to 280. That's not a negligible drop either. And of course, the obvious upside is $7.50. I would say YVR right now is a solid hold. However, if you haven't entered yet, I would wait for it to have the MACD line solidly diverge away from the signal line here. And I would also focus on volume. I would say for this right now, OBV seems to have spiked here for the last for the last rip, and OBV likely is going to also track for the amount of growth that we want to see on a day-by-day basis. If you're trying to scalp YVR, if you're trying for a long position, I would say right now is a fair entry position. Not a financial advisor, of course. TripAdvisor. Kev Santana says, I sold a GME share for $2.50. Or $2,500. Is that $2.50 or $2,500? Because as an American, the period means the period. We're the opposite of most of the world. Period for us is a hard decimal stop. So I'm curious. At the same time, I'm skeptical. So I'm not sure how you could prove it though, because I'm not even sure if like a screenshot would be able to do it for most people. So I guess the chat, how would you believe this story? First of all, paper hand. But second of all, would you believe the story of $2,500 a share? Maybe as that glitch or that spike that we were talking about before. Like some sort of like scary spoof wall that he was able to get past. That would be pretty legit, actually. So, as we notice here, the resistance turn support turn resistance here for TripAdvisor is according to. I guess I didn't draw any levels of support and resistance when I first analyzed it a couple of, I guess a month and a half ago, a couple of weeks ago at least. So I did not see anything on that. But for TripAdvisor right now, I would say it's right hovering at this level of resistance here, and it's one of the only times since it was a support that it is now recontesting it. So I would say if it does recontest it and sharply diverge in terms of the MACD line, I would say that would be a fairly attractive place to enter. One of the other things to notice at this channel of an ascending level of resistance is also very attractive. However, this impulse wave is not cut and dry. It's a little ugly in my opinion. Kind of comes around as like a concave rise up with too much growth in the very beginning of this wave. So I would say seems like there might be something more than just buying and selling pressure here. Where we would have to look at clear, compelling news catalysts, right? People might be going out and traveling soon. So these recovery stocks keep a very close eye on them. Oh man. Ooh, popping that arm. Okay. Let's see. Okay, so what I'm going to do is I'm going to bring this back up. So we have this Nomura news here, Archegos Capital, Credit Suisse. We saw that when you thought the SEC had been silent. So let's see if there's a too long didn't read here. Too long didn't read. The US SEC has restricted our access to information they think they are required to make public. Ooh. Uh-oh. Okay. Big grain of salt here. Finishing blow, the end of the shorts. This is a long one. Too long didn't read. The end is in sight. GME is a company with incredible fundamentals due to its transformation. So the catalyst will come, and they will sure as heck come from GameStop side. Organic upward pressure from a transformed company. I wish there was just a little bit more like meaningful stuff in the 200 and read so I can actually understand how to like. Oh shoot. Oh, it's a flaming dumpster. Oh, that's funny. Possible GME catalyst incoming. So GME has a interview tomorrow, so that's something to consider. Kev Santana, show you this Robinhood account. This happened back in January. Send you pictures on Instagram, or I can send you videos of my account. I'm just hesitant on showing glitches and trying to present them as like possible avenues into conspiracies, because data is king. This is the most important piece of the puzzle right now. Herbert Sukinik, give this a read. Herbert Sukinik, the greatest diamond hands of all time. Weekend story time. What have you learned about Sukinik? The most, okay, I don't know. All right, so the Citadel hiring freeze. Awesome day, Ape Ease, says Ryan Zadie. Market is volatile and down, yet GameStop stock stable and up on the day. Love you, GME. True, fair enough. GameStop currently is trading right between these two resistance levels, right underneath the VWAP here. It's okay, take your time. Let's see if GameStop does get supported by 180, where AMC right now is also holding steady. Yeah, there is a good amount of red in the market right now, and GME is holding tight. Gosh, Bitcoin just recovered. Why can I never time it correctly? Oh man. Time in the market, ladies and gentlemen, is better than timing the market. Super important distinction. 805. Okay. So, big thank you to those apes who could just walk away rich right now, right? There's a lot of apes that could just walk away rich right now, but they are staying put. So, to all shorts, save yourselves. Don't go down with the ships. 200 and read, you lost. The smaller shorts don't have to go down with Citadel. Cover now. Ooh, that's a good point, actually. Everything that they tried to do didn't work. DFV is still in. This is like slam poetry, right? Everything, you shut down the buy button, didn't work. Vlad 10F shield for you, didn't work. You had the financial MSM trash GME when it was going down. Completely ignore it when it was shooting back up, did not work. Threatened the top DD people. We stand with Pixel, did not work. FUD hasn't worked. They tried their best. They were not leaving. Now the whales are here. DFV is still in. That's a good point. The smaller hedge funds are, once again, their own organisms. So it doesn't make sense for them to continue fighting when there's no need for it. The Fat Burrito says this is a good time to buy Discovery and Viacom. Discovery and Viacom, no. It's not. Well, I can't give you financial advice, but the reason why they tanked is because a hedge fund has now gone belly up that was invested in those two companies. It's not like that hedge fund can stop being belly up tomorrow. It's likely that there's going to be a major hole in the market now that could be filled by other hedge funds or other investors like you guys, but that's an important distinction, is that there was support for those two stocks. If you think that this automatically means that, oh, in that case, the true value of the stock is still higher, yes and no, depending on who still wants to support it. It could be you, but then you would have to like hold through hard times and put all your money into Discovery and Viacom, just like that hedge fund did, right? And if you think that you plus millions of other apes can't fill that hole, then likely the true value of that stock is going to stay lower than it was before. That is the true for the entire economy. Viacom and Discovery Channel tanked because of one hedge fund taking out their positions. Imagine if all of these hedge funds start getting margin called and take out their positions and tank every stock on the market. It doesn't mean a flash sale, even though the market will recover with time. It just means that now there needs to be another force that fills that gap that the hedge fund has now created. I went ahead and fixed the problem in the Suez Canal for everyone. There you go. Let's see. Well, this is an entire subreddit of people against CNBC. GME roughly 70 million shares outstanding, 45 million%. Okay, so let's go back and look at that options chain. Oh, so brand new put wall. Who dis? So we saw that there was a battleground testing at $200. That was put on 25th. So let's see if so the 26th. So on the 26th, we saw major, a battleground between the put and the calls at $200. Now there is a $2 million put wall at 250 strike price. So if today we end up rising above $200, there we have these guys to worry about, contesting $5 million worth of puts against $5 million worth of calls at $200. Let's look at the 25th as well. Gives a sense. So $200, there's 3 million. So there's roughly a bigger gamma ramp thanks to the amount of calls put in at around $200 than the put wall up at $200. However, at 250, so this is something that I'm trying to find some support for. 250, there is about $500,000 worth of calls on the 24th. And then $2 million worth of calls. Okay, so there actually is, because of this $2 million worth of calls at 250, an equal, oh, there's another $2 million. So there's $4 million worth of calls at 250, and only $2 million worth of puts. So there's actually still a 2-to-1 ratio for the number of calls on our ramp upward to 250. So that's not bad. So even though this looks large, it's only because of the amount of puts someone decided to put on today, or a large group of somebody's. The end of the shorts. I just want to read this real briefly. Hey guys, we just have 85 more subs until 74,000 subscribers. That'd be pretty cool. I think that'd be something to write home to. That would be, that would feel pretty good, I think. 4,700 people watching and 74,000 subscribers. Now that would be pretty poetic justice. Grab that like button if you guys haven't yet to try and drive that momentum upward. So GameStop is currently, this pattern right here is a retesting of this support level twice before it fell through. So at 182. So if you guys notice here, there's consolidation here and here, but it means to correct. So these are two descending levels of momentum here that wanted to correct. GameStop ultimately decided to bring it back down to 180. And so that currently stands as a descending level of resistance here that is probably going to bounce back just like it did before here. That's something that we want to be able to focus on. We also see a wedge forming here as AMC starts to have a ascending level of support, but have the same level of resistance up above. So this is something to watch AMC and GME for here. Once again, we talked about earlier during this live stream that we are going to have new technology. So this might be the last chance that you guys see WeBull. If you guys haven't gotten your 2 free stocks yet, we are transitioning over to new tech, maybe during lunch today for power hour, or during a let me see, during tomorrow's market open. Okay, so what I can do here is notifications. Oh, heck yeah. Perfect. Okay, sweet. So how do I access this? Sweet, sweet, sweet. Okay, very nice. Let me see. Alex says, if you're watching, just hit like. It's the least you can do for this amazing info we are getting. Thank you, Mo. Alex, I appreciate you. I appreciate that a ton. Let's see. Tara White just subscribed. I appreciate that as well. Kev Santana again. I did not need to spend money to lie here. I sent on Instagram the proof. I'm not kidding. Was not a glitch. 2,500 to share it. Explain me that. The issue with this, I'm not trying to call you, I don't think you're a liar. I think that it's dangerous to call a glitch because this might inspire more fear, uncertainty, and doubt. So let me see. I will show it, but you have to tell me, maybe send it again because I don't see it in my Instagram messages right now. But if you can send it again, I will be able to at the very least show your screenshot, right? With the huge grain of salt that this is likely either a glitch or something else to explain it. Because as of right now, the market is experiencing major glitches. We covered how the glitches could be, the hedge funds implementing manipulation tactics in a previous video. Okay, what I wanted to see here, indeed the development of blah, blah, blah. GME has 3 incredible fronts as investments. Incredible company fundamentals. GME is shorted on more than 100% of its float confirmed. And then a new wave of unparalleled customer loyalty and fandom. That's true. What is the finishing blow? It is definitely the catalyst that will come from the GME side. Okay, so this person thinks that the finishing blow for the shorts is coming from the GME side specifically. But unfortunately, if they wanted to, they could have covered this. They could have covered something. Well, okay, you know what? Actually, I think this would be a good post in conjunction with this GME catalyst coming in tomorrow, right? If they're having a meeting tomorrow, this could explain exactly what is happening tomorrow with that. Okay, in that sense, I have this to cover, and then the missing key piece of the puzzle. How HFTs are covering FTDs and why the TDTOS bugs are not what we think they are. All right. Let's see. What's up with DNK, Andrew? Please see me. I need answers. Lol, got money. Hold on, what'd you say? Hold on a sec. I'll still be using WeBull to trade, but we're getting a new technical indicator set up here. It's gonna be cool. Okay. I'm not switching to another broker. Okay, let me see. Hey. Okay. Made sure that I didn't miss any of those supers. Huge missing key piece of the puzzle. This is how HFTs are covering FTDs. I'm going to either do this one, and there's a meeting tomorrow, which could be into what could they be announcing, and then we go over to that DD. Okay. Okay, so let me see. Yeah, I wouldn't say BTC is crashing by any means. It just had a 4% run up to 5,800. Yeah, that's the opposite. It was at like 50-ish thousand. Okay, let's do this real quick. Sarah Squeezy Pleasy. Now let me actually turn my face around. So I'm tired of not knowing which side is which. Flip horizontal. There we go. Hey you guys, tomorrow there is going to be a major catalyst in play because GME seems like they are gearing up for a meeting. We want to look right here to my left. We have X post from WallStreetBets, possible GameStop catalyst incoming tomorrow. All right, they present a possible new catalyst, the iron to the nitrogen and the hydrogen, on the 30th of March 2021. And with third bridge, it has been named GameStop, e-commerce transformation and structural business overview. Maybe the reason why leadership has kept quiet about their future in the earnings call last week. We covered that earnings call live, and there was a big expectation and not a ton of delivery on top. So there may have been holding out on announcements so that third bridge could get the juicy news. But then again, these are speculations coming from, not a financial advisor. So, and neither am I. So October was on the Microsoft deal and the upcoming console cycle. What do we have coming tomorrow? We'll take a look at the agenda on the image below. Right, we have exclusively linked to GameStop as the first image for the October interview. They say this because you see Walmart, Amazon, Target, and Best Buy listed as relevant tickers for this interview. Right, too long, didn't read. Possible catalyst, GameStop has an interview tomorrow discussing their future with the same firm they had an interview with that they also announced the Microsoft deal in October 2020. Tomorrow's announcement also includes all of these other ones, Amazon, Walmart, BBY, as linked tickers to tomorrow's announcement. Now, what could they possibly be announcing? Well, first of all, thank you, user STEDENT. But what we are likely going to see is what a user Anon GME holder has been talking about here. If you guys like the DD that these guys have been putting together, I appreciate them being able to compile it for us. Then smash that like button so that their message gets out to more Moon Platoon apes, and subscribe and hit that bell button so that you can help the channel get up to 74,000. So, introduction. Listen up, the fellow ape brothers and sisters. They have lurked in this beautiful community since the 45s. They like to say that they are not a financial advisor, and neither am I. The game that we've gotten ourselves into. This is, once again, talking about what GameStop could be announcing tomorrow and why the finishing blow of the end of the shorts can be coming from within GameStop. The game that we've entered into is one that is not only played by our beloved GME, but with countless other stocks in the market. Almost always, this game is played by the shorts and the shorts alone, banding together in hordes and driving companies into the dirt, all the while reaping insane profits on their plays. The shorts are usually successful in these plays due to their gargantuan presence and influence throughout the market. They are able to psychologically beat those that oppose them through controlling the market by methods such as short attacks, ETF shorting, naked shorting, and payment for order flow, as well as controlling the narrative by paying the media, journalists, growth hackers, and social media experts. They know the market is ultimately a giant psychological game. They know that fear, uncertainty, and doubt will kick in and cause further selling pressure from the way they attack the price at vulnerable times. Ultimately, they want to cover their position once it is profitable for them, meaning the price is lower than the original value they bet against. There are countless amounts of companies with different short interests. This value can range from 0% to 20% or higher. We covered even crazier amounts of SI in a previous DD that we covered over the weekend. From an industry standard basis, 20% is considered a high short interest. For example, in July 13th, 2020, Tesla experienced a soar from approximately 1,500 USD from approximately 200. This happened with a short interest of around 25%. So let's skip right here to quote the wonderful Mark Cuban. Their goal is to never cover their short, because then they would get the company going out of their business or getting delisted. And we've covered this from the very beginning. How does a company make massive amounts of gains from shorts? That's how. Because you can essentially short them into the ground here. The shorts can only win against a GME if it goes to zero, and the scenario cannot happen. The fundamentals of GME guarantee that with a 99% certainty. Remember, we've talked about 99% certainties with other DDs before. Always take your own research into account when making these probability plays. This also means that the shorts have already lost the game. Now imagine a chess match with the lone king on the board against an entire army of bishop, pawns, rooks, and knights and apes. That's what we are looking at right now. The end game. Okay, let's just read this bold part here. What you are currently seeing on the tickers every day on market open is not the real price of GME. The real price of GME is buried under so much shorting pressure, short attacks, ETF shorting, naked shorting, that lifting it would blow up the price to historical, unprecedented, galactic levels, causing shockwaves across the universe as we know it. Now, hyperbole aside, this is likely going to be the technical data behind everything here. This also means that the price is artificial and that the shorts will try to gradually show the holders of GME more and more higher prices in their own range that they can afford without being absolutely margin called to death. Think about this as a negotiation between us and the shorts. The shorts keep coming to offer different prices for our priceless diamonds. Shorts in January 28th. Hi guys, we're offering you a maximum of $460 for a share of your GME. And look, the price is going down more. More people are accepting our offer. Ha, you better sell yours too. Shorts in February. Haha, I told you to take the offer on 460. Now look at where we are. We don't negotiate with longs. Last chance to take on $150 a share. This company's valued at $15 a share. $150 is a steal later on. I told you this is a dying company. $45 a share is better. Ha ha ha. You should have listened. And now, okay, this is awkward. So maybe it didn't work out last time. But how about I come back at the table in January? But because you didn't listen to my price, the highest I'm willing to go is $360 a share. You better take it now. I'm not coming back. I swear. This is back with the second gamma squeeze in March. So they control the price. No. Indeed, the development of the business must cover the share price development. The more the share price rises, the better the business must go or the outlook must be. When the price decouples from the fundamental basis, the short seller attacks. So much for the presumed logic. However, a problem for the short sellers arises when the price goes up and up and up, and they have to buy stocks to cover their obligations, which creates an enormous demand on the market. GME has three incredible fronts as investment. Here are the three. Incredible company fundamentals. GME is in the process of transforming into a digital powerhouse for video games, and it could not be in a better leadership position with God entrepreneur Ryan Cohen spearheading its future. The industry and focus of the company is in a very flexible position where it has immense opportunities to expand into and conquer varying markets. GME is literally a future giant in the making with its leadership and brand value. GME is shorted more than 100% of its float confirmed. This means that attached to a company that can fundamentally be more than $1,500 a share by, for example, 2025, there is downward pressure on the stock that exceeds its available shares. This is an unprecedented scenario because of the rise of the Phoenix happened after the shorts had gathered in to feast. This scenario cannot cease to exist due to the natural new shift and direction of GME and the inability of the shorts to close their positions unless they want to literally die as companies. A new wave of unparalleled customer support and loyalty is growing in numbers every day. Now, who better to lead these already loyal customers whilst bringing in waves of new and satisfied customers, all the while leading the company to its promised land of glory, the master of customer excellence, Ryan Cohen. So these are all ideas coming from within GameStop that they could cover tomorrow in that Catalyst meeting. So too long didn't read. Let's actually go down here. The end is in sight. GME is a company with incredible fundamentals due to its transformation, what shorts hate. So the catalyst will come, and it sure is going to come from GameStop's side. New CEO, CFO, shareholder vote, etc. It'll be beautiful to watch as we soar past the galaxies in this rocket. Organic upward pressure from a transformed company is the worst enemy of shorts that never want to cover. So be patient. Mother of all short squeezes is coming. Remember, this is not financial advice coming from someone who is also not a financial advisor. Thank you to these two people that have wrote these DDs. A user, a non-GME, a non-GME holder, but I suppose that means he is anonymous, not that he doesn't own GME, and then a user, STEDENT. If you guys wanted to support the show and be part of this group, the Moon Platoon, the Meatball, the Space Legend tier, and the Gorillionaire tier, we do go live bell to bell every single day, and getting 2 bells is just as good as getting 2 stocks, 2 free stocks, using the WeBull link down below. It's the one that says quit Robinhood, and I think you guys are doing yourself a disservice if you're not using the technical analysis charting app that I use up here for now, but not for forever. I will see all of you in space. Alrighty. So one of the first things that I do want to be able to cover here is moving through this space here. Okay, so I'm going to wrap up a little bit early today and then come back for after hours. No, it's not for after hours, for power hour. So Keith, why is the esports segment as a whole remaining so low? Seems like hidden gems still. Companies like SLGG, Gamble, AESE, etc. Boomers still not getting it. In general, I would say that the industry itself has to essentially connect with the larger, like, it was natural for GameStop to expect to be connected to SLGG, right? Because the esports and the brick and mortar existing infrastructure for these channels, right? It's all about channels when it comes to these esports communities, right? At the end of the day, could have made beautiful babies together. So that's one of the first things that I would note. However, that's you know, a give and take. I would really imagine that a catalyst for the esports community is going to necessarily be one that takes into account that many people want to game in many different types of forums, right? That's what the gaming chairs and the new systems that are set in place for GameStop exist because of that infrastructure in place, right? We want to be able to bring communities together and catch that rebound for the pandemic. It's a little bit of food for thought right there. Okay, let me see. Okay. Let me go through a little bit more. Okay, Kev Santana. Let me just look at this screenshot for Kev. Here it is. Okay, so here is Kev's conversation with Robinhood. Whoa, that was weird. So, we received your order. This is back in January 28th. We received your order to sell half a share of GameStop. Your half a share of GameStop has been filled at an average price of $2,500 per share. Your order is complete. Okay. I don't have an explanation for this. I'm honestly surprised that more DD hasn't covered this. So if this is a once in like a serious lifetime kind of conversation, glitch or something more dastardly, we'll get to the bottom of this. I'll talk to Kev offline. All right, so that's it. That is it for this morning. I know it's a little earlier than we usually wrap up, but we had a lot of important news that I'm going to clip up later, and I am going to wrap it up here, and we'll catch you guys right back when Power Hour is coming back in. Once again, I really do appreciate you guys supporting the stream, jumping on each morning, and I will see you guys in roughly a couple of hours right for Power Hour. All right. Once again, I really do appreciate you guys, and we'll see you in the money. Peace.